Let's get going. Welcome everyone to today's Cake DeFi Twitter space. If you're watching us on video, then obviously welcome to the video. Today, our Twitter space is going to be a bit different because Fabio, head of community, cannot join. He is actually on a train ride to a community meeting. And so I have the pleasure, or actually, actually, it's really fun with him. So, I do have the pleasure to spend 100% of my time with you today. And we're going to discuss two things. Obviously, I'm going to look into questions as well, but we're going to look into Q2 transparency report. We've had a amazing Q2. Yes, June was razor thin when it comes to staying profitable for the company. July as well. So obviously, it's good that we see a bit of a price uptick. So it's nice. We're going to go into that. And then obviously, we're going to look into CPI numbers that came out yesterday and discuss what can or could this mean for a possible H2 rally, second half of the year rally, something we've discussed a couple of times. What could this mean for potential deflation? So yeah, we're going to go through all of that. And if you have questions, simply tweet at me and then I can go through that. And we're going to walk this through. Obviously, during the Twitter space, you will not have the pleasure of having video with that. If you're watching the video, you're going to have a screen recording or screen share as well. But I'm going to do most of the talking anyway, so you should have no issues in following. So should be straightforward. With that, let's dive right in. I would say kind of summarizing Q2, it started off relatively strong from kind of the entire market. Then if you reflect, obviously May, Terra Luna, June, it started all with three arrows, and then one after another CeFi company came tumbling down, and yeah, that was quite a shocker, I think, for many people. Yeah, and I think it was quite a memorable quarter, if you want to call it this way. On top of that, the entire rest of the market also came down, and that kind of reinforced that entire setback. Coinbase came out with numbers this week. I think they did 700 million in operating loss, and then they had another 400 million in impairment loss. So 1.1 billion dollars in loss. That is pretty crazy. If you kind of ask yourself, then which crypto company is actually still cash flow positive right now? I assume, right? Binance still is. I assume FTX still is. Maybe they're not. And then I don't know. We still are. Cake DeFi still is. And I don't know. I mean, I don't know how the other companies doing. I think Kraken probably is still cash flow positive. Probably Gemini, but I don't know as well. It's getting narrow. It's getting thin, right? And it also kind of shows how difficult this space actually is when the tide's going out. You see everyone who's swimming naked, and yeah, it's I think you know my opinion on that, right? My opinion that's actually the good part about everything. I know that sometimes there's this false narrative that it would be way better if we had this more linear growth, if we didn't have these like booms and busts. Obviously, a lot of people criticize that this is because of the money printing. Yes, and that is true. But on the other extent, I mean, we wouldn't have seen this explosive kind of growth in 2020, 2021 for so many companies, for so many businesses. We wouldn't have had all these opportunities without that. And then there always is the time after the party, right? We party, and there's the time after the party. And that's never a pleasurable time. So yeah, we're seeing this a bit at the moment. And I want to mention one thing, right? If this crypto winter is really going to hold on for, let's say, some time. So we do see a bit of a rally up, and I do think that rally at the moment has some legs. I do actually think we're going to see a bit of a rally until later this year. I would be quite shocked now if we see a faster turnaround. I'm going to talk about some factors that could influence this, But if we then believe, hey, maybe, maybe we're not going to see like we're not going to see all-time highs right now. Maybe all-time highs only going to come in, I don't know, 2024. Like I'm just spitting numbers here, right? Who knows? And these all-time highs maybe coincide with the Bitcoin halving cycle and so on. I don't know. Who out there has enough dry powder to survive the next 1.5 years? I definitely know we do. And that's, I think, important. Even if we made $0, we easily would have that kind of dry powder. I don't know who else. And then the question really becomes, who manages to fundraise during these times? It's not easy. And it really kind of shows a bit how actually very few use cases are monetizable in that space. Quite interesting, right? If you think about it. A few exchanges, a few CeFi platforms, a few CDeFi platforms, and that's about it. So, and then obviously you always need great execution. You need great teams, and I hope we're doing a good job there. So, obviously, when you read the report, it really starts in with saying that we did have the strongest quarter when it comes to growth numbers. We've never added more customers in a single quarter than we did in Q2. We never had that many new customers funding accounts. We never had that much KYC. KYC times improved dramatically. I think the average KYC time is now 2.4 minutes. So that's absolutely record. We worked so hard on our operational flows, on working on withdrawal times. And I really appreciate your feedback on that, where you then said, yeah, this really improved. So it was absolutely mind-boggling. So quite a crazy kind of quarter. All-time high in rewards when we count in coins. This is very close though to Q1, so not much difference there, but hitting a record there in dollars. We paid out $58 million in rewards in Q2. So yeah, this is, I mean, it's obviously lower than in Q1. I think it's a third lower than in Q1. But considering that crypto prices dropped by like 60-70%, I think this is quite impressive. Yeah, and then if you scroll a bit further down, obviously I reflect a bit on the market. There's one story though that I wanna share, and I'm gonna share this here, and it's really a story that kind of always sticks with me even today, and many times I then reflect and I reflect on a lot of things there. So I want to reflect together with you on this. And the story is, there's literally not a single company, and I mean most of the companies and most of the projects, be it coins, be it CeFi platforms, that kind of went bust over the last 3 months. Pretty much all these projects somehow had some connection to Singapore. Most of them were actually never in Singapore. They just kind of were situated here, but they did business everywhere else, so they were everywhere else. But I pretty much met every single one of them. And with some, we had very long discussions, with some, we had very short discussions. And many, many times, it was all about us lending funds to them, us investing in them, us using them, us listing them, us doing this with them. And, you meet these people. It's a really good book. I mean, Malcolm Gladwell, Talking to Strangers, right? I think it's quite interesting to see this a bit. And I don't think any of those founders or decision makers had any ill intentions. I really don't think so. I think they were all very optimistic. They love the space. They're very supportive. And it's just very, very difficult then to ask yourself, who do you say no to? Right? Who are you going to work with and who are you not going to work with? And it's so difficult. I mean, it's so difficult to kind of then pin it down. When were the decisions made that we didn't list Terra Luna, that we didn't list UST? When were the decisions made that we didn't work together with Three Arrows Capital? When were the decisions made that we didn't send funds to Celsius or to this company or to that company, or didn't take a loan here, didn't use that as collateral, didn't work with them, right? Like, it's so interesting from a reflection standpoint, and obviously company changing standpoint. So I don't know how often you and I were sitting or talking, and after that I was like, dude, we're offering our customers 7.5%. I have no idea how these companies generate more return. I have no idea. Like whoever I talk to, they cannot explain that to me. And yet I'm sitting at that table and they're like, dude, if you give us 1,000 Bitcoins, we can generate 12% for you, right? So imagine, I mean, just imagine you being the decision maker for a company and you have to take a decision for your own funds, for the company funds, for customer funds, right? You have to take all these decisions and you sit there and you're like, okay, on the one hand, you can offer 7.5% per year, or you can offer 12%. You have no fucking clue how someone offers the 12%, but man, it's 4.5% more than what you currently can actually generate. And if you don't offer the 12%, maybe customers are leaving to other platforms. And that's what customers did. Because whenever we didn't know how returns were generated, or whenever we weren't able to show them transparently, we actually had that hard decision that we would not jump and use those services. And trust me, this was so many times when we were sitting there and we were like, oh my goodness, like, are we the idiots here, or is just everyone else an idiot and they just don't realize it? And believe me, there were so many months when I sat there and I was like, maybe I'm too conservative, you know, maybe I got like scammed too often. Maybe too many times I trusted people who then completely backstabbed me. And maybe I'm just like, I'm a chicken now. Maybe, you know, I don't dare to take the risk anymore. And I don't know how often u-zyn and I were sitting there and we were really reflecting. We were reflecting on, were we overly cautious? Were we just on the spot? And I still think there's a lot of luck involved, right? I mean, I still remember many times when we then were like that close in making a decision on changing some of our structure. And then always something came in between, right? Sometimes it was a bit like coincidence. Sometimes it was like just like a gut feeling. And at the end, when you reflect about this, I'm really, really proud that over those 3.5 years now, we were extremely stubborn and strict in following and working with our principles, right? Working around our principles of being Cake DeFi, being transparent. Obviously, we do have coin custody, but we are completely transparent about the funds and we make the user experience super simple and we provide this one-stop access. But it was all about that transparency. And I'm really, really glad that's what we stuck with. And at the end, I'm also really glad that we had zero exposure to any of those platforms. Right now, we have zero exposure of uncollateralized money out. There's maybe, I think, like it's a super tiny fraction, 0.0 something percent of our entire funds that are on external platforms. And we just have to have that because of liquidity and kind of funding systems. Otherwise, stuff just doesn't work, but that's absolutely negligible. It's completely irrelevant. And I'm just super proud that at the end, I mean, when everything left and right was burning, we actually stood so strong, and we designed our system to be that last domino falling, and I think it shows. And yeah, I really want to congratulate the entire team for that good decision making. And I think that's powerful because it can go so quick, right? So obviously, I want to say thank you to you. Obviously, also congratulate you for making that good decision and picking a good partner. And yeah, so I think crazy start and too many more years with hopefully such good decisions. So yeah, that was just that reflection on all of that. Yeah, then going down, I'm reflecting on our 3 main OKRs that we had. The very first OKR was to be multi-chain and to add, basically to be multi-chain, add more coins and have easier user experience on a lot of systems. Initially, I was like, that's going to be the easiest one. Like, we're so ready for all this. We can just list one coin after another. It turned out that this was actually the hardest one to achieve because we had so many fires to put out with platforms left and right going bust, with customers panicking for like no reason, but obviously panicking. And people like, there's these stories, right, where people, they write in on like community, someone like the Telegram channel blocks during the night just to like not have spam and stuff. So they panic. They think, oh, Cake is now bust because they hear about this one Singaporean company that goes bust. They're writing into customer support. Customer support doesn't respond within like 30 seconds. So they like bombard me on every single social media profile. And like suddenly you start having to put out fires, right? So then it comes out to like, okay, we need the proper transparency page, something we had never considered. So we had to put up this transparency page, cakedefi.com/transparency. We had to make everything more robust. Then the second wave came, and that second wave was like record weeks of signups, right? So obviously it's a real pity that so many people lose money with all these platforms. But on the other hand, obviously from a business standpoint, suddenly we had this massive influx of people. And that was just crazy how like we have had one record-breaking week after another. If we take away this 1 week in April, there was this 1 week in April where we ran this incredibly insane promotion. And there was this 1 week with like utopic high signups. If we remove that week, and I don't know if we're ever going to break that week. I hope we will break this week this year. But this is just like insane. But then we had 1 week after another, where 1 week became better as the next. And so that put a strain on the entire kind of database. And we had expected, oh yeah, it's like a crash market. So people are going to be very cautious. And then we see the exact opposite. Obviously, we're super happy about this. Welcome all new bakers. But that led at the end to really actually being super slow on the product and tech side in launching multi-chain, earn, simplicity. And so that's all going to roll over into Q3. I think for you as a customer, I think you really appreciate rather having stable, strong infrastructure, everything super solid on the existing, rather than us starting to gamble around and adding more possibilities a bit too rapid. So that kind of held us up there a bit, but I think at the end it was the right decision. The second OKR was to stay cash flow positive. We achieved that. Well, we actually turned a profit in our operational business. We are actually cash flow positive now over the last every single month in like Q1, Q2. June, as I mentioned, was like razor thin, so it was like just on the dot. But the key thing on this is we paid out $58 million in rewards. Even if we had zero revenue right now, we would easily last another 4 years without treasury. That is, I think, absolutely essential. We did look into now, and this kind of ties in a bit with our third OKR, which was to finish the PCAOB audit, which our finance team like hit at the beginning of Q3. My goodness, had you told me a year ago that a PCAOB audit takes a year, I'm not sure if I would have done it. It's incredible. What was also maybe a couple of stories on that. So PCAOB audit is that audit that you need if you want to get listed on any proper stock exchange. And so we had our 2019, 2020, 2021 years audited. And so like a couple of challenges. So obviously in 2019, we were like a chaos startup, right? I mean, I think we were like 7 employees or 7 team members. It was a completely different kind of documentation, completely different kind of protocol than obviously we were in 2021, right? I mean, 2021, we had like 50, 60, 70 employees, so completely different, right? We had proper financial structure, proper documentation of everything. If you're a startup, I mean, at the end, all it is about is surviving, right? So it's not so important to like document every single decision, why and how, and no, it's just about, hey, like, it doesn't really matter. You're like 7 people, you just need to get stuff done, right? You meet each other every single day. It's just the 7 people. So obviously keeping that standard in the PCAOB audit, that was absolutely insane. And the auditor, I really thought at the beginning the auditor is not going to be able to get a handle of that business. For me, that was like, I'm not sure if they're going to understand every single thing. I mean, this is blockchain, this is DeFi, liquidity mining. I mean, our customers half of the time don't understand what liquidity mining is, right? Whoa, at the end, right? And I really told that in that sign-off call when we finally had that sign-off of the PCAOB audit for all 3 years. I was like, you know what, guys? I was like so impressed how, like, at the end, you understand every single part of that business inside out. And that was just really, really, really impressive also to see. It was obviously very like fulfilling to see that all the statements and all our analysis and all our financial statements and marketing and growth had really tied in, and that this was checked off. I know that right now we haven't released that audit. There's a very specific reason. It is just because we want to wait a bit and see what the market sentiment is doing. Because, I mean, we could now get listed on any larger stock exchange. I think we could get listed in the US, in London, in Amsterdam, or in Hong Kong, or whatever, right? And it would be a relatively quick process. So at the moment, I just want to just watch the market a bit. Obviously, we could have gotten listed in Q1. I mean, that would have been the signing of everything, and then we would have had to wait until the end of Q2, but that would have been the timeline anyways for the audit to finish. And so we would start to trade maybe in July or something, had we gone through with that SPAC merger, maybe in October or after the summer, it depends a bit. So right now we're just watching the sentiment a bit, see a bit of what's happening, keeping our options open. That's why there's a very specific kind of timing at the moment where we're just not releasing any of that audit statements. But if we're like, okay, you know what, we really want to just ensure all our customers that everything that we've said that we're doing is checked. It's like triple checked. It's like anally checked, right? That you can not only like trusting us because you can check on the blockchain, but you actually see all the financial documentation and all the checkings there. Then we're going to release this also to the public, and then you can see all this. Obviously, that's us putting the pants down a bit. You're going to see our financials, our growth, assets, governance. Yeah, and it's quite, man, it's quite impressive to see that analysis, right, inside out for a company. So yeah, that was quite something. Trust me, that was quite powerful. And so the reason I want to mention this is we do have a super strong treasury. We do have a super strong financial backing. We have looked now a bit more into actually maybe bringing the right investors on board. It would really have to be the right investor for that very simple reason that I think we can really use that timing right now to really snatch up significant market share. Most companies are really struggling. They're really hurting. And yeah, if we just add some extra funding right now, then we can just go all out. I don't want to touch our treasury for that, just because I feel in the current market, in the current kind of bear time, having a 4-year runway is, I think, in my opinion, almost needed, because we don't know. I mean, if we go now into a 2 to 3 year recession, which some people are expecting, then man, like we definitely need that powder, and I sure not am gonna risk the sustainability. I'd rather us not be too aggressive right now and risk it all without treasury. Then I would rather say, hey, we have that extra runway, and also it needs the right investor for that, right? So the investor needs to understand really more like a partner, that we're not raising funds right now because we don't have the money ourselves. It's really a very calculated approach where I'm like, hey, look, you want to get exposure to one of the most exciting CTFI companies in the space? That's us. That's it. So you want to have that opportunity, use it. Because right now it's like, I think we can really put a lot of stuff to work. So let's see. And yeah, if we manage to go public in the, I think near future is maybe exaggerated, but at some point, then obviously this would be quite interesting and a really nice kind of roadmap. So that's where we are at the moment. Yeah, you see the summary here, achievements, outlook, and so on. So I think all super nice. One thing we are doing as well, we want to diversify a bit of our treasury. I think, yeah, so far our treasury basically consists of two things. It's either dollars or crypto. Again, majority of our crypto, Bitcoin, Ethereum. So we just very, very conservatively invested. What we're going to do is we're going to invest 15 million DUSD into so-called decentralized assets, so D-Tesla, D-DLT, and so on. It's a 50 million. That's quite a sizable amount. We do this because we really want to diversify our treasury, and we believe long-term this is a very smart way to do it. It's only a smaller part of our treasury, so we're not risking like the treasury or the company on it. It also doesn't make us a fund or something. It's really more that we want to just have some diversification. And yeah, considering that maybe we do see a bit of a rally in everything, being too focused only on crypto and dollars is very focused actually on your investment approach, and a treasury should be diversified. And so, yeah, but we want to keep that in the crypto space. So we're using decentralized assets. So that's going to be quite nice. And the really cool thing is we're going to make this completely public. So you can actually track and trace that, and you can follow that yourself, and you can see how well or how bad our treasury is doing there. And hopefully it's doing really well, obviously. So that's going to be quite nice in case you're going to be interested. Yeah, hiring wise, I think we're one of the few companies left still hiring. I don't know, probably a handful of crypto companies are still hiring. That's it. I really think, I don't think there's more than 5 companies in the world that are in crypto that are still hiring. We're one of them. At the moment, we are about 140 people. A bit over half of that are in Singapore. We did hire a record 34 people in Q2. I don't think we've had a quarter where we hired more than that. So absolutely bonkers. We're still hiring mainly on the tech and product side. On marketing and ops, we're also still hiring, but not as much, just because those teams are really, really strong. And I think one thing I've mentioned a couple of times, and I just want to mention this here as well, I don't believe in that you need to have like large teams to show you success. Actually, I think the best companies, they have few team members. They're just extremely efficient. They are resourceful. They know what to say no to. They work on the key things, right? I think the most successful people is not those that do the most. It's they say no to the most things, and they just do a few things really, really well. I think you all know the Steve Jobs kind of story where he comes back to Apple in 1997, I think, and realizes Apple is close to bankruptcy. And what does he do? He doesn't expand the product line. He cuts it down to like 7 products, and that's it. And that's at the end what makes Apple so successful. Quite powerful story, right? It's not about and that's also, I mean, I think it's also a quote that Tony Ive says: "Great design is not about adding more; it's about removing more." So quite yeah, inspirational. So yeah, I think on the more senior roles, I know there's always a lot of hiring agencies listening and then writing to us. We're looking for a VP of people, a VP of design, and a chief marketing officer. Yeah, if you are an agency and you're listening to this, it's absolutely key. At the moment, we're really good with agencies. You're happy to reach out, get in touch with our HR team, but we have a really strong sourcing team and everything. So, but man, look, it's if you have the right candidate, I mean, I'm always going to say yes to the right candidate. And I'm also absolutely fine in paying for the right candidate, right? Don't get me wrong. I think team is the most important thing in a company, actually, because yeah, if you have 1 million customers, but you have a bad team, you're going to lose your 1 million customers. And if you have no customers, but the right team, it's not going to take long and you're going to have 1 million customers. So yeah, that's always the same. So team, that's where it all starts. And that's how we make sure that you as our customers are treated really, really well. Yeah, and then what else? I've linked up a lot of our articles, PR pieces, interviews, so you can just read them up in the blog post. I think the marketing team, PR team, comms team, community, I mean, I think it's been fantastic work. To be honest, I don't think it's very easy to to work when obviously the market is not doing well. So yeah, I think that makes I think then a lot of sense. So yeah, let me open the Twitter. I have my blocker on. Hang on, wait, I need to switch off my social media blocker. Give me a second, otherwise I cannot open Twitter. Let me just go into the questions, if there are any. I'm not sure, so let me just quickly see. If there are any kind of questions, then you can just tweet at me, but I don't see any right now. Okay. Nope. Then I think, yeah, I think on the transparency report, that's pretty much it. Q2 was absolutely a blast. Q3, is going to be all around streamlining a lot of things, focusing, doubling down on what works, cutting what doesn't work, staying very cautious about that obviously not everything is going to stick. I think that's important. During bull markets, you sometimes get tricked into believing that everything works when it doesn't. I'm personally, I think this you notice as well. I'm the father of three now. We just got twins, so for me, lots of things to juggle. Big company, big family. I'm not going to do much traveling. I've declined pretty much any speaking opportunity for the next 6 months. I'm not actually having many plans on being out of Singapore. As a company, as a whole, I think the only event at the moment where we are going to participate is Singapore FinTech Festival, which is in November here. Other than that, we have been very cautious on participating at events at the moment. If obviously if I can participate in as an event remotely and it's a great event and I can participate and help as a speaker, this is great. But on that, it's just been putting head down, working, hustling, getting stuff done. I think that's the key part. Again, I think during the bull markets and hype times, events work really well. As soon as the drier times come in those events, you actually have the same kind of industry people stroking kind of their own dicks. It kind of feels there's not much of external stuff. It's more like the same kind of people congratulating how awesome they are. So that's my experience, how 2018 was, and I'm just a bit careful on this. But again, I mean, if it's a great event and we can participate remotely, happy to. If it's a great event and someone from the team can go where it makes a lot of sense, then sure. But other than that, we're staying a bit cautious on that. So that's a bit on maybe on the marketing side. I think on marketing, doubling down on what really works, incentivizing the referral program. We're gonna really double down on that. Working with influencers, really gonna double down on that. These are all things that are really, really straightforward. We've seen great results. At the end, it's paying you, right? Not paying the magazines or large companies and so on, and kind of back to basics. On everything else, operations, they always notice. In general, I always see that a company has three large departments. One is building stuff, one is selling that stuff, and the other one is kind of managing the operations in between. And so that's like finance, legal, compliance, ops. Hope I'm not missing any one of the larger kind of operational teams. But so that's kind of the three kind of large groups that I see. And so ops always knows this. I think there's nothing worse than having companies where the operational departments are too large. It's kind of this overhead that no one wants. Everyone at the end wants like people who build great stuff and then obviously sells this stuff because that's what's exciting. Lean, fast teams. So that's what we're going to focus on. So on product as well, it's really about focusing on the key things, focusing on what really works, focusing on what matters, building the stuff that you as customers want. So obviously, if you have those key things, we're like, dude, like that's what we need. There's just someone at the door. No, yeah, just drop it. Yeah, I always feel like I'm here, the gatekeeper. My office is right next to the entry door. And someone is just always coming, and then they always ask me, and I don't know. I always feel like I need to answer the door here, which actually there's a sign there and just says, "Please put the package in front of the door. We just pick it up." It's unlikely that you have parcel thieves here in Singapore. I don't know. I always see these videos in the US where these package thieves are. Just haven't really seen that here until it happens, right? So yeah. And so that's a bit of what I see here. And then again, obviously adapt to what's happening in the market. If we do see a bit of a rally now, we're going to talk about this next, then obviously adjust, get more and more aggressive. We haven't, I think our marketing expenses and so on are still at all-time highs. We haven't dialed them down. We're just becoming, obviously, you have to be very, very cautious on every dollar now that you spend. Where maybe 6 months ago, you could just basically throw dollars out of the window and always something would come back. And now it's really about, okay, in order for marketing not to become an expense but an investment, you want to spend a dollar and you want to get more than a dollar back. And so you need to really be super cautious about this. And so that's just where we are and all that. So yeah, kind of rounding this all up, I also finish with that kind of sentence here in why we do what we do. We do it because we truly believe the root of all evil is actually the lack of purchase power. I truly believe that. I believe that so much shit in this world is going down, not because of money, how this statement goes, the root of all evil is money. That makes absolutely no sense. It's also not that there's a lack of money. We actually have more money than ever before. We all know this, right? Inflation galore. It's the lack of purchase power that leads to so much drama in this world, where people feel that they don't have enough, and where it starts in a personal level. I don't know, there's so many statistics that show if families just had $600 more a month, relationships would stick together. There would be, I don't know how much less domestic violence. And it just always makes me super sad, right? Hearing these stories where kids or children get abused because, I don't know, parents feel financially stressed. I think there's nothing worse than hearing these stories. It's absolutely shocking, right? And so it goes from there and it goes all the way up, where, yeah, I think if people would have more purchase power, they would be winning, right? And at the end, that's why I think so many of us get into crypto. And that's exactly why we do what we do. We believe that providing people easy access into the space of DeFi with cash flow, with capital gains, it's at the end what gives people more purchase power. And so that's why we're building this easy to access platform, one stop, super straightforward, that, yeah, we kind of get to that vision closer and closer day by day. So yeah, and yeah, thanks so much for being with us on that journey. It's ups and downs for sure, but yeah, it's always forward. I think that's key. With that, I think enough of Q2 reflections. I also don't see any question on it. I think I answered them all. So let's go into what's the market doing, what's going on there. Let me just open a couple of things here so that we can have something to look at. Great. So what do we have? Fantastic. Looks nice. So Bitcoin price, obviously, yesterday we had CPI announcement. So let's open that. We had 8.5% an increase in CPI in the US. Expectations ranged from 8.8 on the lower end, 9.2 on the higher end. So 8.5 definitely was on the lower end of all that. The market yesterday, especially the general markets, pumped right away. Also, crypto pumped right away. What happened here? Something completely jumped out. Sorry about this. We had Bitcoin yesterday pump up, then it correct down a little bit. I think the market didn't really know what was going on. And now Bitcoin took another stab at the 25,000 mark. I think, again, I'm definitely not the chart astrologist here. But one thing you can definitely see here is higher lows, higher highs. So the trend's your friend. And at the moment, I think the trend is definitely bullish. You look at the other crypto markets in general, Bitcoin is slightly underperforming. Ethereum, I think, is the big kind of killer here, having outperformed Bitcoin now. Yeah, I mean, quite dramatically. Obviously, there was this massive article from Arthur Hayes on Ethereum. He's predicting Ethereum going to 5,000, I think, in the next 1 to 2 months. So yeah, quite crazy, right? Yeah, and so is this gonna have legs, or is this gonna crash? I think one key thing to really kind of look at is how CPI is kind of set up. One thing you're gonna see is, especially, there's still a lot of CPI, a lot of inflation coming from energy. And the reason why this is important is because these energy numbers have been going down over the last couple of weeks. And we notice, I mean, you feel this when you drive a car and you put fuel in and you see that suddenly you pay less for the fuel. Obviously, it's still incredibly high, but you pay less. And so with that right away, you see that something there is happening. And so I think some people are actually now expecting that the Fed, first of all, may not have an emergency August interest rate hike, which would have been possible, right? The Fed could have just gone in August into an emergency hike. It's unlikely that the Fed is doing this now. And it's also unlikely that the Fed this year is going to raise more than 1% in total. So some people are saying, you know what, maybe in September we're going to see 0.5, not 0.75. Maybe in November we're going to see 0.25, and maybe in December we're not even going to see a raise. Or maybe we do see a raise in December with 0.25, and yes, maybe it's 1.25% in total that we're going to be raising, but we're not going into the 1.5 or even 2% that some people were kind of like fabulating about. So, and in total, right, and I think that's the big if, right? If we don't see any escalation in Ukraine or Taiwan, if we don't see housing coming down, and if we don't see kind of any crypto escalation, especially around any kind of insolvencies, any kind of liquidations, I would actually be quite constructive in believing that general markets and crypto markets have seen a temporary bottom, and we could see a nice kind of midterm rally, something that obviously politicians also would want to see until the end of the year. So all of you who have started rebalancing maybe a bit, started to buy a bit over the past couple of weeks, I think great times. Be always cautious if you see those pumps and then you get kind of FOMO-y and you want to get in during those pumps. It's always a bit dangerous. But as a whole, I see this quite constructive. So that's a bit where I'm standing with all that. Right now, this would be the perfect time to say, Fabio, what do you see in the community? And then Fabio has always these really great stories from some influencers, and he would have some tag along, and I just don't have that because I'm sitting here all by myself, and I have only this rational data and reason, and I don't have the rest. So I don't have much else other than that with that. So, but I hope that kind of makes a bit sense, and you kind of appreciate maybe a bit of the uptick. Obviously, I really am glad and grateful for you to be with us on that platform, support us. Very much appreciated. And I don't have anything else, so I'm not going to drag out your valuable time. I'm just going to say thank you. Fingers crossed we're going to see a positive trend here in Q3. And hope to hear you next week. We're going to be back during our regular, let me just quickly check the schedule. Yes, so we're going to be back on Tuesdays. The only thing we're changing is we are doing those at 6 p.m. Singapore time. So 12 p.m. Central Europe time, 6 a.m. on Tuesdays, Eastern Standard Time. Reason is just, it's really a personal reason because with 3 kids now, the evenings are a bit more chaotic, and my wife kills me if I am in a Twitter space while she has to have dinner, try to get them to sleep, base them, and I'm having a Twitter space. So I hope you understand that. We're doing it 30 minutes earlier from next Tuesday onwards, but we're back to a regular schedule. So with that, a beautiful rest of a Thursday, beautiful rest of a week. Thank you so much. Talk to you next week. Thank you.